Hey everybody, today's April 11th, 2023, and today we're going to talk about the price of Bitcoin finally breaking $30,000. And we're talking about what I see for the price of Bitcoin going forward. And before we begin, please read the disclaimer. You can pause this video as you read it. Okay, so Bitcoin finally broke 30,000. Last week I talked about how we were seeing a similar fractal pattern that we saw 4 years ago, right? The idea of the 4-year cycle and how we tend to be able to see some similarities on how, right, different years within that 4-year cycle within previous years are very similar to current years, right? For example, in 2022, 4 years ago, was 2018. That was the 2018 bear market. 4 years later, 2022 bear market, right? And then the market bottomed in early 2019 and had a massive echo rally, right? And that's something we're seeing a possible similarity, right? I talked about how we have a very similar fractal pattern that we saw in April of 2019, which is also exactly 12 years, sorry, 12 years, exactly 4 years ago, right? April 2019 and April 2023 now, right? Where we had a 26% weekly candle, right? This big green candle followed by 4 weeks of sideways and then a breakout pattern, right? So a month of sideways and then a breakout to the upside here, right? So 26%, 4 weeks sideways and then consolidation and then a massive breakout to the upside, right? So I said that, will history repeat? Are we going to follow a similar pattern? And right now, Bitcoin is trying to break out and fulfill that, fulfill a possible repeat of. So let me make this clear. Actually, let me get a cleaner chart for you guys. Yeah, okay, so here we go. Is Bitcoin going to repeat history? Are we going to fulfill the 4-year prophecy, perhaps, right? Here, 26.73% candle, right? April of 2019. Here, April of 2023, 26.47%, right? Sorry, not April, March of 2023, right? 26.47%, right? This consolidation happened in April. Same thing as here. We had consolidation, a month-long consolidation in April, and then a massive breakout, right? A massive breakout. So are we going to see that, right? And I think that's definitely possible, especially like if you look at the moving averages, right? You see how we are approaching this gold line, which is the 100-week moving average. Same thing here, gold line. We broke above, and then obviously we overshot and we came down and retested this support. So are we going to see something similar? Are we going to shoot up and then come down and retest the gold line? Perhaps. And so the next question is, where are we going to peak, right? And last time I talked about how it's kind of loading slowly. Let's see, wrong chart. Yeah, over here. So last week I talked about how a possible way to tell where Bitcoin could peak, and if we do follow a similar echo rally, a massive breakout, is by looking at the Fibonacci lines and seeing where we peak and comparing it to now, right? And I talked about how here, if you look here, you'll see that the Bitcoin price during the 2019 echo rally, we saw it peak just above the 0.618 Fibonacci level, right? So if we take that value and we look here, 0.618 is just above 48,000. That's why I said in my last video that if we do see a move up, we could see it peak around 50,000 before coming down, right? So that's if we follow 2019, right? But something that I didn't talk about was another possibility, which is if we follow the 2016, which is right here, which we have a massive breakout, but then we consolidated for a while. And this one took a little bit longer, but it was a much more stable rise compared to this, right? Where we kind of went very quickly and then sideways and then a massive breakout to the top upside. This was more of like a classic parabolic, slow rise into a massive parabolic rise in 2017, right? But the question is, which one are we going to follow? This one or this one? So I think really what we're going to see is just what we need to see is the price action over the next month or two, right? If we're able to break above here and just keep going higher, we'll see something more similar to 2019. But if we hit resistance around this 100-week moving average and we come down to hold, but we are able to hold, but we just continue going sideways, we'll probably see something more similar to 2016 to 17, where it's more of a parabolic run, which I actually prefer because that is a little easier to trade that, right? And it's also yeah, I think it's more fun because the parabolic nature gets people excited, right? Whereas this was more just like a sprint to the top, and we sort of just peaked here and had a double top in 2021, right? But anyways, we're still up. We finally broken above 30,000. That's the big news of the last 24 hours. And this is the first time we've done that since, let me get a weekly chart for you. The first time we tagged 30,000 since June of last year, right? And also this is another critical level because 30,000 in our last bull market, right? This is 2021, was strong support here. And then when we finally broke this support, we just plunge, right? We plunge 50% all the way down to 15,000, from 30,000 to 15,000. But now we've gone from 15,000 to 30,000, basically 100% gain back, right? And now we're hitting this very important level, which has turned from support when we broke to resistance. So I do believe that we will see some resistance around here. We might go sideways for a while, but if we are able to follow 2019 and just continue higher, I do think that that'll be just incredible, right? Just because the amount of time we spent trying to defend these levels, right, and to come back and retest these levels, I think that 30,000 is a strong psychological number. You go on crypto Twitter and you'll see all these people talking about like 30,000, 30,000, 30,000, and yes, it is important, but at the same time, in 2019 we blew through these levels like it was nothing, right? We spent a lot of time around 6 to 8,000 going sideways, and we just blew through those levels. So I'm being cautious right now. I already have a lot of long positions that I took down here, so I'm not taking any new bets as we break above 30,000, just because I do think that there's a possibility we might have some resistance. But if we do follow 2019, we just go all the way to 50,000, like I just said, where I think we might go if we do follow the 2019 route. That'll be quite amazing as well. But like I said, it's better to be safe than sorry. So I'm being conservative right now. We again are hitting this Fibonacci resistance level, right? And Fibonacci levels are generally, levels where you have to be careful, and it's better to wait until we have a strong break above, right? Because these levels tend to be, strong resistance levels or support levels that we come down, right? You can see how this acted as strong support when we had this plunge in March of this year, right? Because of the banking crisis, the regional bank crisis. But we held support. We actually wicked down below, but we held support and basically just reversed, basically straight up parabolic higher, right? Then we consolidated for a couple weeks, and now we're trying to break this Fibonacci support level. And if we're able to break above higher, I do think, of course, we're going to follow something like 2019, which would be great. But for me personally, I do think that a slow and steady, like 2016, right, where we took our time to build support and eventually go parabolic in the later years, is actually better, and it'll probably yield higher maximum price of Bitcoin than if we just sprint higher, right, and consolidate for a year or something. But so let's look at some other indicators. We'll look at the Fear and Greed Index, still looking pretty good. Greed, people are generally returning to the market now that we've broken 30,000. People are feeling more optimistic, more likely to take some more bets, and we still have a lot of upside until we hit extreme greed, which is when we want to start thinking about taking some profits, right? Hash rate is doing very well. We're near all-time high. We had a bit of a pullback since March, but I mean, this is not anything out of the ordinary. Like every time we go up, we tend to pull back a little bit, as you can see, right? But as long as the overall direction is going up, Bitcoin is still doing well, very secure, and yeah, a lot of users, a lot of participation, right? Another indicator I like to use is this graph. It's the 2-year multiplier, and I like this one because it's very easy to just look at this and say, when is it overbought, when is it oversold, right? Generally, when we hit this orange line or above, it's overbought, right? When we go below this green line and it becomes shaded, that's generally a good time to buy, historically speaking, right? And we've been under this line for a long time, so we're seeing something very similar to 2015. So when we exit this when we go above the green line, that's generally a good time to, if you haven't bought yet, to buy and just hold, right, for the next move up. But also be careful, because if it moves fast and we hit this orange line, that could be a time to sell, right? Pi cycle top indicator, something that I also like to look at. This has historically been a great exit signal for the markets, right? But it's also a good way to time when to get back into the market. Generally, the best time to get back in is when we we move above the orange line and we stay above the orange line, right? Like here, 2016, over here, 2019, and over here, 2023, right? We've broken above this orange line, and now we actually came down. And actually zoom in here. So we broke above, and we came down during the March of last month to the regional bank crisis, and we actually held above this orange line. And now we're not only moving up higher, we're staying above, which is awesome. And so for now, this Pi cycle top indicator is saying that things look bullish, right? As long as we stay above the orange line. But like I said, see how the green line is moving down? If the price touches the green line historically, like here, this predicted the Echo rally top in 2019, and we basically went sideways for like a year, right? And same thing here, right? In 2016 and 17, when we hit this level, we tend to move down to retest support around the orange line, right? Until we broke above and went parabolic, right? And usually when we go parabolic, that's when you want to start planning your exit, right? But for now, this is the early stages of this bull market, so everything is looking pretty good, saying that this bull market is just beginning. And if we just, just look at this, the TA, just from a bigger perspective, right? Things look really good. This is the chart from 2011. I mean, this looks pretty good. Notice how we are starting to curve, right, like that, meaning that the expected returns is going to diminish over time. Obviously, as Bitcoin heads to 1 trillion market cap or above, you can't expect 100x, right? Like if you bought Bitcoin down here when the market cap was like only like a couple million, to now where it's like hundreds of billions and then potentially trillions going into the next couple months or a couple years, right? So that's just something to think about. Something that I like to, other assets that I like are Bitcoin miners. The Bitcoin miners generally give you better return than Bitcoin. They are riskier. During the bear market, they plunged like 90%, way worse than Bitcoin. But these two give you the potential to give you higher returns compared to just Bitcoin, right? Whereas Bitcoin is probably not going to 100x. It is possible to buy miners when they're like under $1. I bought a lot of miners under $1. Various miners. My favorites are just listed here, just to save some space. But yeah, Riot and Mara are the two biggest ones. Riot being my favorite one because they are vertically integrated. They own their own infrastructure. So I just think that they're safer. They have their safest bet, but they also still do pretty well, right? Bitcoin is up, just under 2%, and these miners are up, double digits. So again, this is not like financial advice. This is just my own. This is what I'm doing, right? And you have to make your own decision for yourself, right? But anyways, oh yeah, something else is that tomorrow we have CPI data. Tomorrow is Wednesday, and that's going to affect the market, right? The stock market is doing okay right now, but if the CPI data is really hot, the market will predict that the market will probably react negatively because they'll think that there probably is going to be more rate hikes necessary, right? And I've said in previous videos that I do believe that we still have another 25 basis point rate hike, at least, maybe another 25, so 50 basis point hike total for a terminal rate just above 5%. And to me, I think that's when the Fed will decide to pause, right? Because we're starting to see little ripple effects, right? Even though the economy is still strong. Our previous job report for April was very strong. We had added more jobs than expected, and the unemployment rate went down actually. So I don't think we're going to get a recession from the way we define a recession, but it's still possible to see little ripple effects via rising interest rates, right? We saw the regional bank crisis just last month, and I think the Fed is taking note that maybe they should be a little bit more conservative of how they treat the rate of raising their interest rates. And if the CPI data is cooler than expected, better than expected, then they might either raise it by not as much as people expect, or they might just pause, which is great. I don't know if they're going to cut rates this year. I don't really think they're going to do that until 2024, but I think that as long as the market believes that a pause in the rate of interest rate hikes is coming, then I do think that the market will react positively, right? Because the market is forward looking, right? So anyways, that is my analysis for today. Obviously, we want to see Bitcoin hold 30,000, right? If that is true, we might see a huge move to the upside. Again, like I said, towards 50,000, which is where the Fibonacci is. The Fibonacci levels aligned with 2019's Fibonacci levels. But also, just keep in mind that 30,000 is a strong psychological level because we held support in the last bull run and then we broke it. So it is possible we might hit some resistance, especially if we move up to the 100-week moving average over here, this gold line, right? And we might go sideways for a while. So just keep that in mind. This is a good time to see what the market is doing if you bust down here. But I wouldn't take big risky bets above 30,000. We want to wait for confirmation, wait to see if we can at least take out 35,000, right? And if that's possible, we might see a huge run up to 50,000. But if we're not able to take out 35,000, I do think that we may go sideways. We may go sideways for a while, which is not necessarily a bad thing, right? Give the price some time to consolidate after this massive, 80% move from, the bottom. So, or sorry, 80% move year to date, 100% move from the bottom, right? 15,000 bottom. But yeah, I will update you on Thursday. Please follow me on Twitter, EddieLux_, and I'll definitely update you and see how the price of Bitcoin reacts when the CPI report comes out. And we'll see if the price of Bitcoin fulfills this potential prophecy of the 4-year cycle, right? April 2019, impulse move higher. April 2023, impulse move higher, right? So yeah, that's it for today. Thank you for watching this video. If you found this video useful, helpful, informative, please like this video, leave a comment below, and subscribe for updates. Appreciate your support. Thank you again, and have a great day.